Hi, in this video we will learn the format of a few ledger accounts. Preparation of these ledger accounts will help us find out missing information and enable us to complete the cash flow statement. In this video we will learn the format of the following ledger accounts. One is the proposed dividend account, the two interim dividend account, 3 provision for tax account, 4 fixed asset account where the depreciation is charged to fixed asset account, 5 the fixed asset account where depreciation is charged to provision for depreciation account, 6 the non-current investments account, and finally 7 the intangible assets account, that is a patents account, for example. We'll begin with the proposed dividend account. Proposed dividend account. Please remember, this proposed dividend is dividend of the previous year. Very importantly, we should note that the proposed dividend of the current year is a contingent liability and must be ignored in cash flow statement. We'll continue with preparing the ledger account. Left side debit side, right side credit side. Particulars rupees, particulars rupees. We'll provide for the proposed dividend of the previous year from surplus, that is balance in statement of profit and loss, and the same amount will be paid off as to bank account. Now this amount will be added in OA, operating activities, while determining the net profit before tax and extraordinary items. While this amount will be shown as outflow under the head of financing activities. So this is the format of the proposed dividend account. Please note, this proposed dividend is what relates to the previous years. The current year proposed dividend is to be ignored. It's a contingent liability. Next, interim dividend account. The information with respect to this interim dividend will be given in the additional information. left side debit side, right side credit side, particulars, rupees, particulars, rupees. We'll provide for the interim dividend by surplus, that is balance in the statement of profit and loss, and we will pay it off. To bank account. Now this will be added to operating activities while determining the net profit before tax and extraordinary items. Whereas this will be shown as outflow under the head of financing activities. So this is the format of the interim dividend account. Please remember, the information with respect to interim dividend will be given as part of additional information below the balance sheet. Next, provision for tax account. Left side debit side, right side credit side. We have particulars, rupees, particulars, and rupees. The opening balance of provision for tax being a liability, it will come on the credit side. By balance brought down, and the closing balance to balance carried down. Now we need to provide for the provision for tax. So that will come here as by statement of profit and loss. And the payment of tax will come as to bank account. Now we need to note something very importantly. Now where we have only information with regard to the opening balance and the closing balance, then we need to assume that the opening balance is what has been paid for and the closing balance is what we provide. Now, on the other hand, sometimes information will be given not only with the opening balance and the closing balance, but also either the tax paid or the provision for tax. So this is the tax paid and this is the provision for tax for the current year. Now, if one of these items are given, then the other item will be the balancing figure. So let's say the opening balance, the closing balance and the tax paid is given. Then we know that provision for tax for the current year will be the balancing figure. Now, on the other hand, where the opening balance, the closing balance and the provision for tax is given, then we know that the tax paid will be the balancing figure. Now, as far as where each of this will appear in the cash flow statement, this opening balance we can get from the balance sheet. Opening balance from the balance sheet and the closing balance also from the balance sheet. By provision for tax, the provision made will be added in OA while determining the net profit before tax and extraordinary items. And this will be shown as outflow under OA itself at the end of OA. Now, where there is refund of tax amount also given, then the amount to be added to OA while determining net profit before tax and extraordinary items, as well as the amount against tax paid, both should be net of refund. I repeat, where the amount of refund of tax is also given, then the amount which we will add in OA while determining net profit before tax and extraordinary items, as well as the amount we will deduct in OA at the end as outflow of tax paid, both will be net of refund. So this is a provision for tax account. We'll move on to the preparation of the fixed asset account. Fixed asset account. We will prepare the fixed asset account assuming that the depreciation is charged to fixed asset account. Fixed asset account, left side debit side, right side credit side. We have particulars, rupees, particulars, rupees. The opening balance, fixed asset is an asset, so the opening balance of fixed asset comes as to balance brought down. The closing balance of the same comes as by balance carried down. Any depreciation charged will come as by depreciation account. Where there is sale of fixed asset, it comes as by bank account. A loss on sale, by loss on sale of fixed asset account. And in case of gain on sale, to gain on sale of fixed asset account. And any purchase of fixed asset will come as to bank account. And the account balances. We'll check out where we will get information and how we will show it in the cash flow statement. The opening balance, balance brought down, we will take it from the opening balance sheet, and the closing balance by balance carried down, we will take the figure from the closing balance sheet. Any depreciation has to be added to operating activities. Any loss on sale of fixed assets account has to be added to operating activities, and any gain on sale of fixed asset account has to be deducted from operating activities. The sale of the fixed asset will be shown as inflow in investing activities, whereas the purchase of fixed asset will be an outflow in investing activities. So this is the format of the fixed asset account in the first method, where depreciation is charged to the fixed asset account. One more very important thing that we should note is, in this method, the balance brought down as well as the balance carried down, both the opening balance of fixed asset as well as the closing balance of fixed asset, are in book value, not the original cost. So these two items are the opening book value of fixed asset as well as the closing book value of the fixed asset account as on the date of the balance sheet. Let's move on to preparation of fixed asset account. Where depreciation is charged to provision for depreciation account. Now in this method, we need to prepare two accounts. The first one is the fixed asset account. And the second one is the provision for depreciation account. We'll begin by bringing down the opening balance in both these accounts. Two balance brought down. Opening balance of the fixed asset account, that is the amount at cost, original cost. The opening balance of provision for depreciation account by balance brought down. And the closing balance, two balance carried down, the closing balance of provision for depreciation account, and in the case of fixed asset account also, by balance carried down, closing balance at original cost. The current year's depreciation by depreciation account, since the depreciation is charged to the provision for depreciation account. Now, where there is a sale of fixed asset, It comes as by bank account. The total depreciation on the machines sold or the fixed assets sold from the date of the purchase up to the date of the sale, the total accumulated depreciation on the fixed assets sold will come here as to fixed asset account and here as by provision for depreciation account. So let's write that down. This amount which comes here is total accumulated depreciation on fixed assets sold from date of purchase till the date of sale. Let's continue. If there is any loss on sale, it comes on the credit side of the fixed asset account as by loss on sale of fixed asset account. And in case there's a gain on sale, comes on the debit side as to gain on sale of fixed asset account. Purchase of fixed asset comes as to bank account. The account balances and the provision for depreciation account also will balance. Let's understand where each of these items will appear in the cash flow statement. We can get the opening balance of fixed asset at cost from the balance sheet, opening balance sheet, and the closing balance of fixed asset at original cost from the closing balance sheet. The opening balance of provision for depreciation account we'll get from the opening balance sheet, and the closing balance we'll get from the closing balance sheet. This depreciation account, by depreciation account, has to be added in OA. Any loss on sale has to be also added in OA. In case of gain on sale, it needs to be deducted in OA. Sale of fixed asset is to be shown as inflow in investing activities, and the purchase of fixed asset to be shown as outflow in investing activities. So this is the format for the preparation of the fixed asset account in the second method of charging depreciation, where depreciation is charged to the provision for depreciation account. Let's learn the format of non-current investments account. We have the left side debit side, right side credit side. Investment is an asset. Opening balance, debit balance, to balance brought down, and the closing balance by balance carried down. For sale of investments by bank account. Any loss on sale by loss on sale of investments account, and in the case of gain on sale, to gain on sale of investments account. In case of purchase, to bank account, and it balances. Let's see where each of these items appear in the cash flow statement. The opening balance of non-current investments, we can get it from the opening balance sheet. On the closing balance, we can get it from the closing balance sheet. Where there is a sale of investments, it will be shown as inflow in investing activities, and any purchase of non-current investments will be shown as outflow in investing activities. Where there is a loss on sale of investments, it will be added in operating activities, and any gain on sale of investments will be deducted in operating activities. So this is a format of the non-current investments account. We'll move on to the preparation of an intangible asset account using patents as an example. Patents account. Patents is an asset, the opening balance having a debit balance, to balance brought down, the closing balance by balance carried down. Intangible assets are amortized, and the amortization amount comes here as amortization by amortization. For sale of patents by bank account, in case of loss on sale, by loss on sale of patents account. And for gain on sale, to gain on sale of patents account. For purchase of patents, to bank account. And the account balances. Let's check out where each of these items will come in the cash flow statement. The opening balance. We can get the figure from the opening balance sheet. The closing balance, we can get the figure from the closing balance sheet. Sale of patents, inflow in investing activities. Purchase of patents, outflow in investing activities. Amortization, added in OA. Loss on sale of patents is also added in operating activities OA, and the gain on sale of patents is deducted in OA. So this is a format of the patents account. Now we've learned to format a few accounts learning the preparation of these accounts is very important because we need to find out missing information to enable us to complete the cash flow statement.